Hi, and welcome to Freeworld News, another episode we have for you today, where we're going to talk a little bit about what's happening with regard to Greece and the developments there and currency. So, according to latest reports with what's happening with Greece and the euro, Greece have said quite clearly that they have no mandate to leave the euro, and they won't pay the IMF, and the Greek government bonds are, as a consequence, doubling in value. Basically, investors are rushing to sell following decisions to delay the 300 million euro repayment to the IMF. That's driving up Greek debt, that's driving up the interest rates. Can you elaborate a little bit more on that?
Well, the latest thing has really been that the Greeks have claimed that the historical precedent for paying back these loans in 1 month. So they had, I think, 3 tranches that were due in June, out of which the first one is due today. And they claim that there's a precedent where they can pay them all in one big lump sum at the end of the month, just before the end of the month. They've been having discussions in the Greek parliament as to how far they can go in terms of the austerity measures that are required by the EC to continue the backup loan. And we're still in a kind of stalemate, and I don't think anybody can really conceive of what will happen if Greece leaves, and so they're assuming that an agreement will be made. I think that's fairly dangerous thinking. I think it's still possible that agreement is not reached and that Greece has to leave, but I'm in the minority there, a very sizable minority. About 75% of the traders, anyway, think that a deal will be reached, because it's unthinkable that it won't, and Greece has to leave. So. It's a strange situation which is increasingly tense, I think.
Sure. And with relation to currency and how this
with currency, that bet that 75% people at least must be thinking the alternative to a deal is just too hideous to complicate, and that's pushed up the euro to 112, 113, 114. Well, say 112, 113.
It was strengthening last week, wasn't it?
It strengthened the last week, and that could be also due to the net position. There's so much money which is shorting the euro. If you look elsewhere in the last 3 or 4 months, a lot of money has left Greece. I was talking to somebody in Greece just now, a business person, and they said many Greeks have already found hiding places in their houses and have gone to the Argentinian model, if you like, of having a loose brick somewhere and some euros stuffed down the back of it.
Is there a mass emigration from the country? I mean, like, obviously we're...
No, but there's capital flight.
It's capital flight, okay.
So that means money is moving out of the country, and that ultimately that makes... you hear very worrying things. You hear things like some of the small touristic islands like Lesbos. I heard yesterday that Lesbos, which of course relies entirely on tourism, they can't afford to keep the lights on and the airport, and so they close the airport. So it's a pretty, you're talking about the lights going out now.
The country's built. And do you feel that the Greeks have hope with the Syriza party? I mean, these clearly they want a landslide.
Well, the party seems to have got in with no public sector cuts. So they were actually employing more public sector people when they could barely pay their salaries.
So if anything, it should be austerity, right? They should be making cuts.
Well, it's kind of austerity you get to when your pockets are empty.
Yeah,
it's
right.
not a choice anymore.
What choice do you make?
Yeah.
So the euro was strengthening last week. Would you like to say anything more about what's happening?
No, I think that's about it.
Yeah.
We're in such uncertain times that by the time this comes out, the situation might have changed completely. So let's leave it there. But we're entering a high zone of volatility. You can see it in the exchanges are jumping up and down a couple of cents in a day on very light news and a lot of speculation. So I think there is an increase in volatility, and that could get much, much worse if there's a Greek exit.
Yeah. Please check out our other videos on the website. One of our traders, Alex, has just given 2 market reports on sultanas and currents.
And currents, of course, coming from Greece. So there's a kind of knock-on effect there. Okay.
Thank you.